What up, what up, what up? All right, everybody. So the stock market today is going absolutely bonkers. It's swinging up, it's swinging down, it's swinging all around. The reason being, CPI data came out this morning. Of course, it was higher than expected once again. Data came in at 9.1% inflation on the month of June. So we're at 41-year highs on inflation. So that market initially receded poorly. We dropped down like 2.2% or something on the NASDAQ. And we initially rallied right back up. Immediately afterwards, we went green, and now we're kind of bouncing around right around the even level in the NASDAQ. So I randomly just looked at the total cryptocurrency market cap, and we're down right now to $860 billion in the total market cap. Obviously, the $3 trillion high, down significantly from that level. We're down 71%. At one point, we were down 74%. But this 200 weekly, we've come down this 200 weekly several times before the NASDAQ, and this is where we tend to find support, and we usually find it after we come down 70-80%. So we've had this swing down. That was when COVID happened. When we initially dropped down 72%. We're below for a week or two before we got back above it and then continued new all-time highs. But 72%, right along with this drawdown that we're seeing right now. This one was a little bit bigger back at the end of the 2018 bull run, and then all the way back into the end of 2018. We dropped down 88%, but came right down to that 200 weekly area and the total market cap for crypto. Found supports before we started moving up higher again. Way back here, we had another drawdown that was roughly 70%. Back when altcoins came to the markets, we saw a drawdown of 75%. So right around 70 to 85% is usually where we find our bottom in the cryptocurrency market capitalization before we start to move higher. So it's just ironic as well that I noticed this, that we're holding the 200 weekly here for now 5 straight weeks in the cryptocurrency market cap. The NASDAQ as well, 5 straight weeks. The NASDAQ is also holding on to that 200 weekly, not getting any closes below it, which is finding a strong bottom and building a base. I've made previous videos on this. You guys can check my previous ones weeks and weeks ago on the NASDAQ. But this is long-term macro support. We've had over a decade of closes above this 200 weekly. We only had a few weeks below it back when COVID happened, a week below it, and get right back above it. But since 2010, basically, we've held this 200 weekly. When we fail to hold it and we start getting weekly closes below it, it's a very, very bearish signal where we can have drawdowns here at 56%. Back in that dot-com bubble when it was popping, dropped down another 56% after we fell below that 200 weekly. And then in 2008, we had another 45% drawdown. So there's a lot of risk, obviously, with buying right now. But I think the reward is there as well. So obviously, if you're smart and if you're a trader, you can enter a trade in this position. Go take some long positions on the NASDAQ, maybe some risk on assets. Because when the NASDAQ turns here, if it turns, risk on assets are going to have the biggest gains. And just have a stop loss if we get some weekly closes below, or maybe even if we set a lower low on the NASDAQ and break below this 10,500 area. And set a lower low, that's going to be obviously a bearish signal for the market as well. So keep an eye on the 10,500 area. I think if this holds, the 200 weekly continues to hold, that's going to be a long-term bullish signal for the NASDAQ, and then risk on assets are going to catch fire. Keep an eye on risk on, keep an eye on Bitcoin, keep an eye on the cryptocurrencies. Altcoins even might start to rally here soon. So trade smart. Peace.